Welcome back to the second and final day of the 5th Annual Conference on Sustainable Water Security, organized by Trends Research and Advisory. Yesterday, we explored the foundation of water security in the context of sustainability, governance, and cooperation. Today, we continue our journey by focusing on practical solutions from finance and investment to technology and artificial intelligence. And finally, resilient strategies drawn from global case studies. To begin our program, we will now proceed to panel 4, the role of finance and investment in transforming water systems. The session will be moderated by Latifa Ibrahim Jneibi, researcher at Trends Research and Advisory. Please join me in welcoming Latifa and our distinguished panelists.
Good morning, everyone, and welcome to Panel 4 on the role of finance and investments in transforming water systems. We all know the urgency. The global water sector faces a financing gap of hundreds of billions of dollars each year. Without new capital flows, the ambitions we've set for water security, sustainability, and resilience will remain out of reach. The question before us today isn't whether to invest, it's how to unlock finance at scale and how to direct it where it makes the greatest impact. I'm Latifa Ibrahim Jneibi from Trends Research and Advisory, and I have the pleasure of moderating this session. We're joined by an excellent group of panelists who each bring a unique perspective. Mr. Robert Brears, founder of Our Future Water in New Zealand, a leading voice on a global water security, and the author of several works on financing and managing water resources. Mr. Vijay Bains, Chief Sustainability Officer and Group Head of ESG at Emirates MBD, bringing the perspective of the banking sector where sustainability, risks, and returns meet. Ahmed Kalbani, Regional Manager for Africa at the Abu Dhabi Fund for Development, with hands-on experience in deploying sovereign and development finance in emerging markets. And finally, Mr. Benjamin Davis, economic expert and director of the Trends South Africa office, bringing a policy and economic systems view on how investment frameworks shape water outcomes. To get us started on a light note, I'll ask each of you this. If you had a minute with a head of state or a global investor, what's the one action you would demand to unlock billions for water security? Let's start off with Mr. Robert.
It's a pleasure to meet you. I'll try to speak a bit slowly because not many people are familiar with the New Zealand accent, so I'll do my best. The first thing I would say is please invest in demand management. I understand that supply side is very interesting for politicians who want to see ribbon cutting ceremonies, but with demand management, almost a third of our financing problems could be solved alone. So please, demand side management is a critical thing. Water leakages, smart meters, all of these can fix significant problems that we have in many cities around the world, saving millions of dollars, billions of dollars.
Thanks so much. I think for me, it's plan for water scarcity. We're going to see more and more erratic weather patterns, so plan for water scarcity. For global investors, invest as much in water as you do in climate change. It's proven technology, there's a proven return on investment. So if you're a global asset manager or investor, invest in water.
Good morning, and thank you for having me. If I would recommend something, I would recommend adopting and prioritizing blended finance. It's a model that uses public and donor funds to de-risk projects and attract private capital. Blended finance does not just de-risk projects and share risks amongst the investors, but also multiplies impact. Thank you.
I would ask policymakers to allocate the rights and responsibilities for managing water to individuals. And the reason why I say that is, in the case of Africa, approximately 90% of the land and the water that's on that land is communally owned, and it suffers from a tragedy of the commons. If you want people to take responsibility for managing water on your behalf, the demand side story that was mentioned earlier, you've got to allocate those responsibilities to individuals to take those corrective actions and water efficiency investments seriously.
Thank you all. That gives us a sense of priorities at the highest level. Let's now dig deeper into why water financing is lagging and where the real gaps are. So, renewables scaled and attracted billions because they had green bonds, subsidies, and guarantees. Why has water failed to achieve the same investment momentum? Should water follow the same playbook, or does it need an entirely new financing model? Benjamin, let's begin with you. From an economic and policy perspective, why has water lagged? Is it a question of incentives, visibility, or something structural in the way capital markets view water?
I think the biggest issue is back to this a problem of the tragedy of the commons. If you look at the way that development finance has been deployed in Africa, the only counterparty that you can deploy that at scale to is governments. The rest of those economies are largely informal. You're not entirely sure who you're lending money to, and you're not entirely sure how you're going to get that money back. What's critical in the research that I've been doing in this space is that water constraint is not a limitation on your ability to drive water security and food security. In fact, in Africa, the countries that are most successful in driving down levels of malnutrition, as well as boosting food production and being more water efficient, are highly water constrained. The biggest exporter in Africa is South Africa. They have one of the lowest water densities in Africa. So the issue around getting finance deployed is around creating more opportunities for financiers to deploy that capital. And that goes back to this issue of who is the person that I can lend to. Having worked in the financing space in Africa, the most successful credit provider, which was a small fintech that I worked for, was lending $40 per person as a loan term, as a loan value, and over very short periods of time, because they couldn't deal with the risks associated with lending more money, and they had impact finance. It's an incredibly difficult model to get right to deploy finance in Africa, because it's very difficult to identify who you're lending to.
Thank you for your input. Mr. Vijay, you've seen how renewables became bankable and attractive to private capital. Why hasn't water managed the same? Is it simply too risky, or are we missing the right instruments?
So I don't think it's too risky. So for us, we're financing billions of dirhams towards water, sanitation, clean water projects in GCC and around the world. I think it's slightly run a language. So I think with GHG emissions, renewable energy, there's an idea of net zero. We don't have that same concept for water. We do in terms of we need to be of a certain standard, but actually we need to explain that to bankers, risk managers, and others. So there needs to be capacity creation there as well. Also, on the other side, from rating agencies, we often, as financiers, educate the rating agencies on the language of what we're doing as well around water. So we have for MSMBD, and I'm also the chair of the UAE Banking Federation Committee for Sustainable Finance, a water finance framework, specifically describing how we finance projects, what good standards are as well. And all of the member banks in the UAE have seen their numbers actually increase. We then spend time with the risk management teams as well to explain the returns of investments on these projects. That's quite unique, actually, around the world. So we've definitely seen those numbers increase. But it's a lot around the language you use, capacity creation, and then also that idea of what does good look like for water. So we need to spend more time with our frontline bankers And often we get deals brought to us that are around green buildings, renewable energy. And then we say, oh, actually, this client's already doing some great things around desalination or water efficiency. Actually, we can structure a sustainability linked loan or a blue bond for them. So we're definitely seeing that increasing. And I think next year as well, the UAE is going to host the IUCN conference and the Ocean conference as well for the UN. So that knowledge will increase as well. I think the instruments are there. We just need to use them all. So to evolve from green to blue.
Thank you. Mr. Ahmed, in your experience, what explains why water isn't scaling the way renewables did? Is it a returns issue, or are governments not prioritizing water in the same way?
I think historically water has struggled to attract investment because it's often seen as a public good with modest returns and high risks. Unlike energy, it lacks the market structures and well-developed financial instruments like green bonds that have made the renewable energy projects bankable. While water can adopt some of the lessons from the renewable energy sectors like the subsidies and the guarantees, it ultimately requires a hybrid financing model that includes tailored investments, deep community integration, and a long-term concessional support. At ADFD, we treat water not just as a basic need, but as a strategic enabler for development, especially in Africa. And allow me to showcase one of our success stories, a landmark dam project in the Kingdom of Lesotho that demonstrates how strategic investments and regional partnerships can transform water security.
Lesotho, the world's southmost landlocked country, where projected water shortages and a lack of clean water are putting communities at risk. The $21.4 million Meadowlong Dam project, financed by Abu Dhabi Fund for Development, has improved the quality of life of over 2 million people. The dam supplies 71,000 cubic meters of drinking water to more than 500,000 homes, and a 278-meter-long bridge has connected communities nearby. The supporting grid offers an energy surplus to over 5,000 homes and over 20 schools in the region. The Meadowlong Dam is one of the many projects ADFD supports to accelerate sustainable development in the African continent.
Thank you, Mr. Ahmed, for this powerful illustration. Now, Mr. Robert, we come to you. From a global perspective, do you see water failing because it hasn't followed the renewable energy playbook, or does it need a completely different model of financing?
With renewable energy and energy, obviously, water is extremely undervalued. So hardly ever does the cost of water actually take into account the social, environmental, economic costs of actually providing that water in the first place. So it makes it an incredibly unattractive investment for an investor, from my perspective at least. And you can see that investments in, say, smart meters. In New Zealand, we've got smart meters for energy for a good decade or more. But with smart meters for water, there's only trials. And that's very similar around the world. And another thing is that when it becomes an unattractive investment, it's very hard to convince investors or governments to invest in the unattractive things, which is demand-side management. So we can see in Africa alone, $30 billion is required per annum by 2030 to achieve water security. But of that 11 billion could be saved just by demand-side management of reducing leakages and smart and metering and things like that. So we can see that a lot of the focus is on either go big or go home, basically. So either have a desalination plant or don't do anything at all. But in Africa alone, $11 billion could be saved from the $30 billion required to achieve water security, and that's very similar around the world. Some of my work is with the Green Climate Fund, which is the UN's $10 billion fund. And one of the things that we we try to do in proposals and help accredited entities is understanding that water is a new asset class. So from the water management side, it's also their problem because it's a traditional conservative industry. So trying to encourage people to actually understand the full value of water is very difficult sometimes because it's seen as a public good. So at least my work in GCF is try to say, okay, we have water as an asset, we have demand side management, okay, we have circular water economy. How can you actually generate a revenue, a profit for an investor? So in my perspective, it's a battle, it's an uphill battle that we're trying to convince people eventually that water is just as valuable or more valuable than energy itself, because without water we don't have ecosystem services, which means we don't live at all, full stop. So until we take water seriously and energy takes all that, the large scale of funding, we're pretty much in a really bad situation. And just very quickly, we can see that you have climate, you have nature, you have food, all requiring water resource funding. That alone comes to $18 trillion. And one of the issues is that water operates in a silo. So we talk about $30 billion in Africa alone, but if we start blending, making multidisciplinary, multifunctional, bringing together, we can actually have solutions coming at scale. So for instance, if we have sustainable agriculture, we then have water efficiency. It reduces less energy required in farms, which means that it's enhancing nature as well through better water quality. All of that combined, if we use our money wisely, we can solve many, many challenges rather than just separately focusing on water, then food, then energy. We can actually come together and actually solve massive problems. So thank you.
Thank you. Now that we've seen where the gaps lie, let's test the solutions. Which financing models have unlocked private capital for water and which are overhyped failures? Mr. Ben?
I'm going to use an example of a financing model that's been in existence for a very long time in the Western Cape. And it's built on the back of water rights that were allocated hundreds of years ago to people who own pieces of land. To give you an idea, when you buy farming or agricultural land in the Western Cape, which is a very dry area, approximately 80 to 90% of the value of that purchase is related to the water that you buy. It's not related to the land. As a result, that water right is financeable as a secured property right. So it looks, feels, smells like a mortgage finance or land-based finance. The water right is clearly delineated in the contracts that were defined over 100 years ago. And as a result, what happens is that every single farmer who buys a piece of land is very, very closely focused on identifying whether somebody is overusing their allocation of water in that time. So to give you an example of what's happened, over the last 100 years, everybody started with flooding their lands as a way of using that water from an irrigation perspective. If you have a look at how production has changed since then, moved to drip irrigation systems, water preservation technologies. There's a huge focus by individual farmers on monitoring the amount of water that they put in. There's a huge amount of research that is put towards water efficiency in the agricultural sector. So maybe the answer is we don't necessarily need to create something new, we just need to spread something that already exists, that people understand, that people have been financing for hundreds of years. And we need to give people more opportunities to be able to use that mechanism to finance their right to water and their right to using it more efficiently.
And speaking of financing models, Mr. Vijay, one of the most talked about models is public-private partnerships. Are they truly effective for water, or are they overused and slowing innovation?
I think the role of public-private finance can't be underestimated. For us, blended finance is really key to growing, particularly in Africa and other countries of operation, to really scale and make sure water's available at the lowest cost, but also there's a great return on investment. I think for public-private finance, it's about risk sharing. And for us, when we talk about credit risk and risk, we always look at that risk model. We look at that return on investment. We look at the tenure of a loan as well. We look at, do we know the client as well? And often public-private finance, blended finance really supports us on this. I used to work in EBRD and RFC, so with World Bank, often looking at this. I think one of the areas we need to improve on is daisy chaining deals. So actually we often see one deal done as a great trial. Actually, as a financier, I want to see 2 or 3 in a chain. That then proves that model and teaches my credit risk and risk teams, this is scalable and we can do this as well. The second kind of area really is knowledge sharing as well. So with public-private financing as well, for us, and I think we've spoken a lot around water technologies, as a financier, we're in the unenviable position, but we kind of need to know about every technology. That's quite tricky. So imagine every sustainable technology we kind of need to have. Often our risk discussions are on water technologies, water saving, renewable energy technologies, hybrid technologies as well. That's when public-private partnerships really help. Because actually a lot of those innovations have already been trialed and done, and actually then when it's commercially available, we can kind of come in and offer that scale.
Thank you. And Mr. Ahmed, would you like to share your perspective?
Sure. I mean, I agree with Vijay when he's talking about risk sharing and about the technology. I believe public-private partnerships can be very effective in the water sector, but only when designed with the right legal framework, transparent risk sharing, and a focus on inclusive service delivery. As we said previously, in water, returns are modest, and risks, especially in some areas, can be higher than others. So risk sharing is also important. In these cases and in these areas, public-private partnerships often need development finance institutions to anchor and de-risk the projects through concessional financing, guarantees, and technical support. I think also one overlooked enabler for the investments in the water sector is technology, which can reshape the future of water systems. Innovations like smart metering, remote sensing, and AI-powered monitoring can turn the basic water infrastructures to data-rich, transparent, and efficiency-driven assets, making them more appealing to investors. From our experience in ADFD, it shows that successful PPPs need capacity building and local ownership, not just financing. When these elements align, PPPs can unlock innovation, scale, and sustainability.
Thank you. This raises the question of how investors decide what's valuable. Is it really about impact metrics, enough to attract investors, or at the end of the day, is it still all about returns? Mr. Robert, you've written about valuing ecosystem services. Do you think impact metrics are strong enough to shift capital flows into water, or are markets still fundamentally driven by returns?
From the water management perspective, like ecosystem services can be valued, and every single metric has $1 of value to it. And it's about making sure that these projects maximize the ecosystem services, and so they're attractive to investors, and whether it's private or examples. And some of the tools available to make sure that the investors see this as an opportunity is like payments for ecosystem services, payments for watershed services, and where actual nature, the carbon emissions, energy reduced from treating less wastewater. These are metrics that investors can use, and from a non-finance perspective, this makes absolute economic sense, that if I can restore a forest and a watershed that then provides my city with untreated, unfiltered, clean water, then I don't have to have the energy, the carbon emissions, the chemicals, everything else that goes with it. That makes sense. But then that nature itself takes a good decade maybe to become mature, and whether that horizon meets investors' horizon, that's another matter, another story for another day. From the nature's point of view, 50, 100 years is becoming mature, whereas an investor, from my perspective, maybe wants a return tomorrow or next year. And there's a problem here, and that I don't think we're actually meeting halfway here. That if we're trying to restore our water and protect our water, it takes time, but investors need a return for their shareholders immediately. So we have a bit of a problem here. So hopefully we can find a bridge on this issue.
Thank you. Mr. Ben, you've been following how ESG frameworks play out in practice. Do ESG frameworks genuinely influence capital allocation in water, or are they more of a reporting exercise, while returns still dominate the real decisions?
I remember discussing this earlier, and my gut feel was being a cynic, but I think that there is, reflecting on my personal experience around this, I do make ESG allocations, understanding that the return is not going to necessarily be market related. So that's in my personal capacity. There are millions of people that make those types of allocations as well. I think everybody sees the value in making sure that ESG delivers. I think, however, that it needs to be co-integrated with hard finance. The numbers being bandied about how short we are from a financing perspective gives you an idea that we can't give that money away. We can't give $3 trillion away, right? We're in a global environment where capital is now running at 5% over 10 years for the first time in 10, 15 years. Governments are fiscally constrained. There is an opportunity cost to capital at the moment. And so I think it's critical that ESG needs to be applied very carefully and very judiciously in order to maximize its value. Because it is an incredibly, like water, it's a scarce resource, and it needs to be used appropriately where it makes the biggest impact.
Thank you. So far, we've diagnosed what works and what doesn't. Let's now shift to the big question. How do we scale investment at the speed required? Mr. Vijay, when it comes to financing water projects, which of these three factors really weighs the heaviest? Risk, returns, or regulation? And do you think any of them are overstated?
Yeah, it's a really good question, actually. I think as a banker, that return on investment is really important. I think we do need more regulations around water, particularly for financiers. So we are often asked around our finance emissions, so who are we financing, what's the GHG impact? I don't think I've ever been asked, the regulators never really asked me, what's the water impact? So, and the same with, say, the alliances we're part of, say, the Net Zero Banking Alliance, UNEP as well. So I'm part of the United Nations Working Groups for Pollution and Water Pollution. We as a bank, alongside others like HSBC, Standard Chartered, are inputting in for that guidance as well. I'd say all three, but I would say that return on investment is always really important, and understanding the tenor as well, and being really realistic as well of the impact. I think, we have this concept in sustainable finance of just transition. I think just transition for water is incredibly important. Accessibility to water. If we don't have water for 4 days, it's game over. GHG emissions, we have a bit of time on. So actually framing it in that way in the regulations is really important, but also from a risk management, sustainability modeling point of view as well. But I would say regulation does need to increase. You won't ever hear a banking saying that in the world, but I would say a more common definition of this as well, and encouraging financiers to model the impacts of not having access to water finance is really important.
Thank you, Mr. Vijay. And Mr. Ahmed, do you see the same constraints, or is it different in emerging markets where water demand is urgent?
I think I agree with these constraints. I mean, I spent the last 8 years working in the African continent, visiting almost 35 of the sub-Saharan African countries. The challenges are almost the same in most of these countries. Our role in ADFD is to try to find the right financial instruments to support these countries with their water challenges. there is a burden and a responsibility on these governments. From our side, we'll do our homework, but at the end of the day, it's their land, it's their water, it's their future for their generations. So, as financiers, yes, we will provide the guidance, we will provide the technical support that is needed for the projects. However, there are regulations needed, as Vijay mentioned. There are policy reforms needed in these countries. And I think there is also a very important idea, which is the investor education. The investor, when going there, he should be aware of the challenges. He should be prepared. He should know what or what not to expect. So I think it's a shared responsibility to deal with these challenges facing the water sector, especially in Africa.
Thank you. Benjamin, when you look at the broader investment landscape, which of these barriers do you think is overemphasized? And which one is the real holdup we need to confront head on?
I think that the framework that we use to unpack the relationships between water and other sectors is an important potential constraint that we just need to unpack. I think that everybody talks about water, energy, and food. I think that the key thing is that there's also other factor endowments in a country that need to be considered. So to give you an idea, in countries with water surpluses, which by the way in Africa are not food exporters, they're food importers, which doesn't make logical sense if you apply the WEF framework. There are other issues at play. And that those additional components are really critical in unpacking the opportunities around how you use water efficiently. I'm going to use a South African example again. One of the factor endowments that I think is a super exciting space that doesn't really get dealt with, but is super water efficient, is the use of natural fauna, so antelope as a protein source. So I don't know whether you saw the FAO OECD report recently about how Africa's calorific intake is severely constrained around protein intake. Africa has a number of very diverse ecosystems of fauna that are good protein sources for humans and are very water efficient. The way that South Africa solved that was to create an entire industry around that fauna class from a protein processing perspective, because it has specific characteristics that make it very difficult to integrate with traditional cattle and sheep farming. So if we don't understand the framework in its entirety, the interrelationships between land, ecosystems, and other components around how technology acquisition occurs in an economy, around how skills acquisition happens in that economy. If there are insufficient skills around water efficiency, if there are insufficient engineers available to deal with the civil engineering components associated with that, chemists and chemical engineers, if there are constraints around labor, then you have you also run into problems. So I think broadening the understanding of the complexity of the relationship between water and how it's deployed and how it's used within an economy and how it can be delivered efficiently is, I think, opens investors' eyes to the opportunity that sits in front of them, that there are actually multiple ways in which you can solve this problem. That's not a one-size-fits-all, and each market has its own unique characteristics that you've got to play towards in order to get the results that you want.
Thank you. So if those are the constraints, where do you see the opportunities we're missing? Robert, from your global perspective, which underused financial mechanisms hold the most potential to scale up, and what's needed to mainstream them?
I think we need more imagination in how we utilize market-based instruments to scale up technologies, solutions through water security. So there's a lot of things out there, payments for ecosystem services, I mentioned payments of watershed services, stormwater credit trading, water quality trading, water trading itself. We have examples from around the world of these which work really well, but they're only examples, they're only pilots essentially. They're not mainstreamed at all. And when you talk about blended finance, if you have, say, there's other ways of doing it. For example, PPPs, you guys are used to huge, big desal plants, but PPPs can also come as community-based public-private partnerships, which involves local governments working with local companies to solve local water challenges. So PPPs come in different shapes and sizes, and we need to start thinking innovatively of how to get the private sector, companies, industries to basically take their money to solve problems that governments don't have enough money for in the first place. So if we think about that, then we can scale up a lot of solutions to these challenges, and also about the interlinkages. We need to be more creative in what we're actually investing in. The circular water economy, we're all used to reducing, obviously, water conservation and water efficiency, but reusing, grey water harvesting, that reduces energy, carbon emissions, etc. Then you've got recycling, water recycling for potable and non-potable use, so agriculture. We're not doing that very much. And then you have recovery, heat, energy, methane. Gas comes from wastewater. Wastewater treatment plants are basically the power stations of the future. That's not done mainstream at all. And also recovery, restoration, regeneration. We're not putting enough of these innovative mechanisms to actually restore nature's the ecosystem services that actually provides our water in the first place. So basically, in a very summed nutshell, we need to be innovative in how we generate the money that we need to secure water for all of us. And also, just one last thing, water security, we often talk about humans, but we're forgetting that actually the definition is that both humans and nature, it's a 50-50 balance here. If we put everything into supply side, we take all the water for ourselves, leaving nature with nothing, we'll be finished, game over. So we need to think about water security as both humans and nature, and using innovative mechanisms to find solutions to water security for both humans and nature.
Thank you. Mr. Vijay, from the banking perspective, do you see the same mechanisms as attractive in practice, or are investors still hesitant to take them up?
I would say the mechanisms are there. I think I agree with everything you're saying. I think we can be really creative. We have carbon trading desks. Why can't we do more on water as well? We do need more ways, so we can have a water sukuk, for example. We already have the UAE as a center for sustainable sukuks in the whole world. So we can make that definition, we can issue that as well. So the models are there, we just need that partnership, imagination. I'd also say when we think about water, what we do as a bank is we think about projects for the clients as well. What's the big buzzword this year is AI. That's, the data centers are very water intensive. Now, the way in which we currently look at the data centers are, we look at, the power use efficiency. What we're trying to do as a bank with the other one, banks syndicating, is looking at water efficiency as well. So we're trying to put that into our existing project portfolio methodology so we can finance more. But again, we're building those frameworks out. We're part of the ICMA Association, we're part of the LMA as well, and we're building out that capacity and knowledge with other banks, so we've got a standard way of describing water as well.
Thank you. Mr. Ahmed, bring this down to the development finance level. Are these mechanisms practical, or do they face challenges in implementation on the ground?
Okay. So I think we are not reinventing the wheel. We have the models, we have the financial instruments, we just need to tailor them to serve the water sector. I think what's most important is to align the public and concessional funding with the private sector expectations, mainly de-risking entry and enabling scale. We've seen from our experience that when the projects are structured to enable scale, sustainability, and also to attract investors, the private sector would join. They just need the right setup, they need the right guarantees, And that would enable them to make the investment decisions. Today we are talking, as Vijay mentioned, Sukuk is one of the models, and also there are pay for impact models that are very, very successful in other sectors. We are also talking about the blended finance. These are all immediate accelerators that can unlock billions of dollars for water infrastructures. I think with the right setup, water sector will not be only fundable, but it will be transformable.
Thank you. And to close this round, Mr. Ben, what policy or regulatory changes do you think are essential to help scale these underused mechanisms and make them more mainstream?
I think the big policy change is to realize that government is not the only party that's responsible for managing water effectively. At the moment, across the African continent, the way that policies are designed is that they're effectively the only counterparty that's responsible. It's very difficult for individuals and water consumers in most African markets to take responsibility for how they use water. The key thing here is to understand that everybody wins if everybody puts their shoulder to the wheel. And that means that everybody needs to take their own responsibility and be given the incentives to take on that responsibility correctly. So working from a policy perspective towards broadening the rights as well as the responsibilities for managing water more efficiently and effectively will actually result in the goals that we're achieving. And you also create the opportunities for people to finance those rights and responsibilities. So I think from a policy perspective is that realization that you're not the only person in the room that's responsible for this. There are a lot of other people that actually do want to get involved. They do want to participate in applying water efficiency. They do pay more than they should when they can't get the type of water that they want. And so as government, the key thing is to pass some of those responsibilities and rights for managing water onto those individuals and those organizations that are able to assist in managing the water more effectively.
Thank you. So we've unpacked the barriers, the gaps, and the models. To close, I'd like to bring us back to action. If the goal is to double the pace of capital deployment in the next couple of years, what's the first concrete step we need to take? Policy reform, new financial products, or investor education? Robert, let's begin with you.
Investor education also goes both ways. I mean, financiers are not water management specialists, and water management specialists are not finance specialists. And, it seems that we're talking about two different things, but, if we can educate both sides, I think we can find a proper solution here. And it's the biggest challenge, I think, is education. And that's the thing that I hope that we can build more capacity on, understanding of both sides.
Thank you. Mr. Vijay.
Yeah, I agree. I think it's that capacity and knowledge creation is really key. I think as a financier, we always work to targets. So actually setting a water target within the bank or within the group is actually really good and really key. A lot of the banks in the UAE, so 8 banks in the UAE made a 1 trillion AD pledge at COP28, and we're making amazing progress. Actually distilling that down to say, actually we'll make a sustainable water target would be really crucial.
Okay. So I think we've talked about the financial instruments, we talked about the investor education and the policy reforms. Maybe one thing we've seen through our experience in ADFD is that when financial innovation is paired with institutional support and local ownership, water becomes transformative.
Yeah, I think to echo that, that translates into price, right? So if there's a credible price for a scarce resource, suddenly everybody goes, oh, we've got to use it more efficiently, we've got to do things around it. It has value, it becomes tradable. So all those policy reforms, all those local initiatives to empower people to use water more efficiently, one of the most important instruments as well is around a credible price. So I think if taking it back to carbon markets, the way that carbon markets are scaling in the leading markets is around a credible framework for how carbon is being traded, and institutional commitment to a multi-decade program. If that's not there in the water space, you're not going to get the financing that's going to happen. You're not going to get the market that's created, and you're not going to get the doubling of the finance. So that's key.
Thank you all. This has been a truly engaging panel, insightful, thought-provoking, and action-oriented. My sincere thanks to Robert, Vijay, Ahmed, and Benjamin for their valuable contributions, and to all of you for being part of our discussion. The key takeaway is clear. Accelerating investment in water isn't just about finance, it's about priorities, and the choices we make today will shape the future of our water security. Thank you all, and please join me in giving our panel a round of applause.